To several investors who look at the stock market, it is a fascinating story of prices going up and down. Oh, the gambling instincts just simply come to the fore. There is this price which moves seemingly without reason, and there are times when there is profit and there are times when there is loss, and there seems to be a superb opportunity to keep punting where the price will go, to put some money there, to stake it and to see prices going up and down. If you're doing this, don't call yourself an investor, you're a trader. You're trading in stocks and you're fascinated by this ups and downs in the stocks. So to have a good trading skill, you need to have your eye on the capital, on the money you have put in. You've put in 100 rupees, you're seeing it run, you're seeing it make money, you're quickly putting it out, and you're finding that it's making a loss. You're quickly booking those losses and putting your money back. There are so many successful traders who've mastered this art of running along with the prices. Do traders make money? Several of them do, but it is a completely different kind of skill set. For one trader who is successful and makes a lot of money, there would be a few hundred who have tried their luck and lost their shirts. What does it take to be a good trader? A stock trader is not only looking at the prices and trying to see where the patterns are or where the movement is, but develops a good, deep market intelligence of what are the mistakes others may be doing. He has an eye for inefficiencies. He wants to know how markets will react to information, how people might make mistakes, and he makes it his skill to find out what are the mistakes people keep making again and again. And he makes it a fine art to identify doing what others may be scared of doing when there is an inefficiency in action. But the trader is a very humble man. A good trader is humble. A good trader understands that the collective intelligence of the market is so much superior to all his tricks and techniques. So when he knows that he's making a mistake, he's cutting back. He changes his rules. So it's a lot of discipline. If you thought that the trader was just sitting there making some punts and making easy money, you were so wrong. So you have just been sold a 3-in-1 account by your bank, or your broker has come and told you that he can give you an internet account and you can trade happily. So you're very happy to find that your road to stock market riches has now opened and you can quickly make some transactions here and make money. You could be really very wrong. In order for you to even begin to trade, you should have allocated a certain amount of capital and you should have a method. How am I going to buy or sell, and how am I going to make this money work for me? In other words, your eyes must be on that capital. Is it running for you? Is it making money? If it's making a loss, am I cutting that loss and putting the money back? Many of us begin with IPOs, where we think that we buy an IPO today, it will list at a premium, we will sell off when it lists, we'll make a quick buck and we'll be out of the market. But what happens? You buy the IPO lists at a discount. The shrewd trader will take his loss and try to make that money in some other stock. A misguided investor will simply hold. He will look to make that loss from the same stock. Keep holding it. The stock, which was a trading stock, which was supposed to be sold off on listing, will now become a long-term investment. So what you find is several quick traders or investors who believe they can trade very well, they end up with a portfolio of junk. A large number of stocks which they have bought for various reasons, which they intended to sell off very quickly, but they're holding it because the stock did not behave the way they expected. A shrewd trader is someone who does not keep living on his dream, but looks at the reality of the market and makes changes to his portfolio. So if you bought a few equity shares and you expected each one of them to make money for you, and you are waiting endlessly for them to run for you, you're not a good trader.